decelerating appreciation or depreciation. How can we help a potential buyer that thinks we're at the top of the market? That's what we're going to cover in this monthly market report. This is for you if you're a real estate agent or a financial advisor interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data you need to make an informed buying or selling decision or help your client do the same. To get us started, here is a quote from Calculated Risk. My sense is the Case-Shiller national annual growth rate of 19.7% is probably close to a peak, and year-over-year price increases will slow later this year. So what does this mean? As clients are out there hearing things like prices have peaked, price increases will slow later this year, it sparks questions and uncertainty. And what that lacks is context and clarity. So let's take a look at what appreciation looks like across the country. This is the price appreciation map year over year for the second quarter of 2021. Now, what you can see here is that the states in red have over 20% appreciation over the past year, and as a whole, the United States is at 17.4%. Now, what we're starting to see is the forecast going forward and what experts are projecting. And that's where we need to get crystal clear with clients about the facts of this market. Let's start with this quote from Ivy Zelman. Closings are set to decline roughly 10% year over year in the second half of 2021, and home price appreciation is on the cusp of flipping to a decelerating trend. When consumers see the word decelerating, they're immediately going to think depreciation, yet experts are not projecting depreciation. What experts are projecting is more home price appreciation, just at a slower or more moderate rate. So let me show you what that looks like. This is the estimated home price performance from the Home Price Expectation Survey. What we can see is that through the rest of 2021, home prices are expected to increase 11.74%, and going forward as we look at 2022 and 23 and beyond, we're seeing continued appreciation, but at a more moderate pace, 5.82% for 2022 and so forth. So what that means is that home prices are not expected to decline. They're just expected to appreciate at a slower pace. Now let's break that down a little further. This is the expected home value change, and this also comes from the Home Price Expectation Survey. So you saw that 11.74% appreciation for 2021 in the previous slide, and if we average out the 5 years that I just showed you also on the previous slide, the annual average through 2025 is about 5.7%, and then cumulatively through 2025, home prices are expected to appreciate 31.8% if we compare them to where they are today. So home prices are definitely still rising due to supply and demand. And so what's really important is that we help buyers understand that buying now before home prices continue to appreciate and while mortgage rates are still low is really important. Buying now is critical to that long-term wealth advantage. And to give these buyers some encouragement, here are 3 reasons why we will see a continued increase in listings going into this fall. First of all, pent-up seller demand. No doubt, homeowners are going to be more comfortable putting their homes on the market as more people get vaccinated and we get a handle on COVID. Number 2, new construction is starting to take off. Builders are realizing the opportunity and trying to build as much as they can. Now, this past year, they've had a lot of headwinds with material costs, specifically lumber, all the things they need to build a home outside of lumber, and all the labor costs and labor shortages have been a headwind for builders. But they're starting to turn the corner and build and see the opportunity in this market. Number 3, the end of forbearance will create new listings. I've gone over this extensively in prior months. We're not talking about a wave of foreclosures, but there will come a time in the market when some homeowners will say, you know what, we can't afford this home anymore. We're going to have to put the house on the market. So we've talked about what to say to a buyer about rising home prices. We just talked about the prospects of increased inventory. So now let's talk about rising interest rates. No doubt we're starting to see some movement in interest rates for a lot of different reasons. I'm not saying the sky's falling and interest rates are about to shoot up, but I do want to give you a look at what interest rates are doing so that you can see how they erode purchasing power and be educated on this topic. Recently, the 30-year fix jumped above 3% as recorded by Freddie Mac on their weekly survey. And that jumped up as they're starting to see indications of the Fed saying, we're going to taper soon. The chief economist at Freddie Mac said this: many factors led to this increase, including the Federal Reserve communicating that it will taper its support to the capital markets and the broadening of inflation and emerging energy supply shortages, which compound other material and labor shortages. Here are the latest projections in interest rates from Fannie Mae, Freddie Mac, the Mortgage Bankers Association, and the National Association of Realtors. And you can see somewhere around the middle to the third quarter of next year being about 3.5%. To put what this means into context for a buyer that doesn't recognize the urgency of buying now, here's a slide I can send you with the price point you want, which demonstrates the cost of waiting. In this example, I've got a $400,000 price point with 10% down. If interest rates go up in the next year, knocking on 4%, for example, that rate now allows you to buy a lot less home. Now, we don't want to convince anybody to do anything they don't want to do, but we do want to show them that as prices rise, as rates rise, it's going to cost more in the long run to buy a home and certainly to finance that home. If you would like a copy of the slide, just give me a call or shoot me a message with the price point you want, and I'll send it right over. DS News came out with this quote: "Home ownership is one of the fundamental keys to accumulating wealth in America, hence why it has been integrally linked to achieving the American dream. Not only can owning a home provide a roof over your head and a secure place to live, but because mortgage payments generally remain fixed while rents may rise over time, a home can be a very effective hedge against inflation. Together, these features can give homeowners an enormous advantage over renters when it comes to accumulating wealth." So to wrap things up, we want to show the buyer that lacks motivation what they stand to gain in 5 years in terms of dollars and cents. The home price expectation survey that just came out took a look at a $350,000 home over the next 5 years, and that the purchaser of that home stands to gain just over $111,000 in gained equity based on forecasted appreciation for the next 5 years. This is the missing piece for people thinking to themselves, why would I buy at the top of the market? Right now, the bottom line is that homes across this country are underbuilt, we are undersupplied, and that's not going to be fixed overnight. Higher prices are still to come. So that's a wrap for the October monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month. But before you go, if you're looking to purchase or refinance, or you know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'd be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks for watching. Bye for now.